Good evening, ladies and gentlemen. Welcome to yet another virtual investor forum. I'm your host, Dan Theok, Senior Vice President of Investment Banking, and today we'll be looking at the special investor briefing where we'll dive into the Q3 results from Mayberry Jamaica Equities Limited. Joining us today on our panel are none other than Executive Chairman Christopher Berry. Welcome, Chris.
Welcome, everybody.
Also is our investment management representative from MAM, Gary Peart. Welcome, Gary.
Hi, everybody. Good afternoon.
You look a little bit far away today. I think you may be somewhere in a different continent. And also, I'm happy to welcome our newly appointed CEO for Mayberry Investments Limited, Patrick Batte. Welcome, Patrick.
Thank you. Good evening.
Great. Now, you guys may be wondering, what did I just say? And so I'll just explain to you Mayberry Investments Limited, one of the subsidiaries in the Mayberry Group. We've got a new CEO. He's replacing outgoing Gary Peart. Gary Peart still remains within the Mayberry Group, but at Mayberry Investments Limited, Patrick's going to be our new CEO, and he has a wealth of experience. I'm really, really proud and happy to be working with him. And I'll allow him a minute to introduce himself and tell us a little bit about his background.
Thanks, Dan. So, really excited to be part of the Mayberry family. Very great brand over the numerous years. A little bit about me, roughly 30 years in financial services, dealing in the global markets, really focused on asset and wealth management with a key focus on operational excellence and digitalization, with a myriad of experience across Bank of New York Mellon, Citigroup, TD Waterhouse, strategy and at PwC. I think, my expertise will bring a new generation of innovation that Mayberry has been known for.
Great. I look forward to that. And last funds under management, 27 trillion?
Correct. So
US dollars.
Correct. US dollars, 27 trillion at Bank of New York, which I think they just quoted is now 50 trillion. So still a very growing business, but when I was there, I was helping them grow that AUM.
Okay, excellent. Assets under management. Appreciate that. Okay, folks. Well, as usual, if you're a fan of the content, don't forget to subscribe to stay up to date with our uploads, and be sure to hit the bell to receive all future notifications. We publish videos like this just about every week. Don't forget to stick around to the end of the program where we'll be taking a Q&A segment. So feel free to submit your questions during that period, and we'll deal with that during our live chat. Also, if you're looking to embark on your very first investment journey, you can take that first step with Mayberry Investments, of course. Follow us on social media to get started today. Okay, so with that out of the way, I would love to get into the Q3 results for Mayberry Jamaican Equities Limited, MJE. And I'll ask them to pop up on the screen right now. We're going to run through that. Then we jump into some Q&A with Chairman Berry and Mr. Peart, and then thereafter we jump into the Q&A from you guys who are tuning in online. Great. So first up, we want to look at the statement of changes in comprehensive income. Actually, I'm missing the very first slide, actually, now that I think about it. So the first slide speaks to the change in the profit per share and the total comprehensive income, 110% improvement in total comprehensive income, 4.7% reduction in total assets, 1.1% improvement in the shareholders' equity. And we'll dive into those numbers, but I'll let you digest those numbers. Of course, we're facing huge headwinds, generally speaking, in the markets. I think that's going to change significantly with the fall in interest rates. Next slide goes to the summary of statement of changes in comprehensive income, where I'll just jump to the bottom line. For the first quarter, you'll see that we had total net profit of $211.8 million for the quarter, total comprehensive income of $113 million. Huge turnaround from the losses trend, big losses trend that we had in 2023 when the markets in general were down by over 30%. We've seen some reversing of that in 2024, but that reversing trend has only just started. 9 months year to date, again, you will see that with total comprehensive income is $448 million compared to prior, where it's $167 million. Still have a trading loss of $256 million year to date. Again, compares favorable with a $2.1 billion trading loss same period last year. And despite having this $256 million trading loss year to date, I just want to make 2 points. One, this is the second quarter in a row where we have made a trading profit. So we fully expect this trading loss to be overcome on a year-to-date basis by the time we get to the fourth quarter of this year. So it's good to see 2 quarters back-to-back of trading gains. So huge trading loss in the first quarter of this year. And what we've seen since then is us rallying back. We've seen just small rally backs in some of the shares, but we still have quite a few stocks that are down between 15 to 30%. And we'll talk a little bit about that, whether it's NCB, Supreme Ventures, or whatnot. There's like 4 or 5 stocks still down. Great stocks in the portfolio, but the market hasn't yet turned around fully. I also want to make note, as you can see here in the first paragraph, that we did do sort of a big move during the year. We brokered a huge sale of CPJ shares. And as part of brokering that deal, where major shareholders in CPJ sold their positions to A.S. Bryden's Holdings Limited, a company majority controlled by P.B. Scott, good friend of Mayberry. In that specific, $5 billion deal, MJE itself sold its 20% stake in CPJ for $2.3 billion at $10.50 per share, something we'll talk about. This is when the stock price was trading at approximately $9. So we've demonstrated our ability to do a huge trade, find a strategic investor, and to do that trade at a premium to the market. And that's important when you're doing a 5, 6, 7 billion Jamaican dollar deal. Sorry, Patrick, we're not dealing with US trillions here in Jamaica just yet, but it's still important when you have a portfolio that's $25 billion and you can do a $2-3 billion trade, 10% of your portfolio, move it in a single transaction at a premium to the market. It speaks to why I love MJE and why I feel like this stock trading at a discount to NAV does not make sense, because here's an example of us selling 10% of the portfolio, approximately 10%, at a premium to even NAV, let alone to have the stock trading at a discount to NAV. And we'll talk a little bit more about that as we go on. On the next slide, we take a look at what's going on with total assets. So we saw total assets falling 4.7%. From 24.5 billion to 23.3 billion, a 4.7% fall. We saw 1.15 billion fall in total assets, $1.3 billion fall in total liabilities. What we see happening here is this is driven primarily by the CPJ sale that I just mentioned, that divestiture, and the fact that we used a significant portion of those sales proceeds to reduce the liabilities of the business. And we'll talk a little bit about strategy with Chairman Berry to understand, why that strategic sale and the reduction in liabilities, and he's building up back his cash reserves again. Hey, what's going on? What's he up to? Also, you can see here importantly that in terms of the shareholders' equity, that there is a $192 million or 1.1% increase in shareholders' equity. So this demonstrates again that overall year to date, we have positive total comprehensive income, and that reflects itself in the increase in shareholders' equity, even after executing a $2 billion sale. So assets may have gone down a little bit, but we've increased shareholder value, which is really demonstrated by the shareholders' equity. And then when you divide that by the total shares outstanding, you get the NAV, or the net book value per share. And you can see again there we've increased the NAV from 1440 to 1456. So this is pretty significant. In a market where, generally speaking, stocks are down, Mayberry Jamaican Equity continues to execute great deals, great strategic deals, and continue driving value for shareholders. That's the takeaway from here. While deleveraging the business, de-risking the business, reducing its risk. So 5/17 sounds like we're carrying, well under 20% debt relative to our equity, which is extremely low for a business of this nature. So very conservative levels of debt. And I believe the chairman's just sitting, looking for great buy opportunities. That's my belief, to further drive future growth in the business going forward. But we'll talk a little bit about that. So all in all, I think that's, good performance for MJE, all things considered, right? We're working in a market with lots of headwinds, but we can definitely see that a change is coming. Interest rates have just started to trend down, literally, in the last month. And my favorite indicator is not the overnight call rate, but actually the 30-day CD rate. And why that's my favorite is folks who are parking their money for 30 days are usually signaling that, they're trying to decide what to do with their money. And when they're earning 8, 9, 10% on risk-free money, Patrick, it's like easy money for them. So inflation's 6, 7%, and 30-day CDs, risk-free money, is 10%. It's kind of a no-brainer. And that's why you have over $130 billion of investors parking their money on 30-day CD rates. So what's happened is that 30-day CD rate that was in June peaked at over 10%, maybe close to 11%. Last week is now below 7%, and this week back up to maybe 7.7%, I want to say. So interest rates have trended down by over 250 basis points in the last 6 auctions. There's a weekly auction. Still about $130 billion of cash out there, but those folks have seen a 250 basis fall in interest rates, and they're going to start to reconsider, hey, what should I be doing with my money? I can't sit on it and earn 7% when inflation is roughly 6%. I'm not really, my real return's 1%. Does that make sense? As well as they go back and look at their statement of investment policy, and they should be guided as to how much equities, real estate, fixed income, foreign securities they want to have. And we have intelligence that tells us that there are certain large players in the market that are $20 billion long on cash that ought to be coming back into the equity market. So we really believe we're going to see strong last quarter, folks looking for good investment deals. And I'm going to predict that within the next 4, 5, 6 months, you're going to see larger deals in the market, $4 billion, $5 billion, $6 billion single transaction deals like we saw 2 weeks ago. National Insurance Fund spending over $4 billion to increase their position in Wisynco by 5%. And I think NIF alone needs to probably invest about $20 billion to get back in line with their own SIP. And there are others out there who also need to invest in equities to, get back in line with their own statement of investment policies and practices. Good deal. Next slide shows sort of what happened in terms of, we like to show this to folks. Folks always ask, they want to know what's happening. What are the top 5 additions you've made and the top 5 disposals you made? So in 2024, you can see we mentioned CPJ before. We sold approximately $2.3 billion worth of CPJ. So that was sort of the biggest, largest single transaction executed by MJE in the last quarter. That happened literally in the first week of July. And then you can see sort of the top 5 additions also for 2024. You can see that we've been buying a little bit more dollar and Jamaica Broilers, Wisynco, Westin, WIG, Wigton, and JMMB. All great stocks, all stocks in general where we have notable positions, especially for dollar and Wigton. And so this just gives you a feel for, what's going on in the minds of Gary Parrott and Christopher Berry and Mark Berry in terms of trading. So we like to share that for you guys so you can see what's happening there. And we'll definitely talk specifically about CPJ maybe. And I'll probably ask Chairman a few questions about dollar as well too, what's going on there in his mind. Okay, next slide shows you the NAV share price. And again, it's, I continue to be amazed that, the NAV, and as we've said, we continue growing the NAV, 1440 to 1456, but the stock price isn't quite, keeping up with the NAV, and it's trading at, like a 23% discount to NAV. And that's not logical to me, folks, for the reasons I explained before. So again, we're holding a portfolio approximately $23, $24 billion of equities, and you divide the value of those equities by the total shares outstanding of MJ, and you come up with the NAV. And it's amazing to me. That's like the breakup value of the fund, sort of, you would think the worst case. And so it's odd to see the fund trading at a discount to its NAV, because these are good stocks that we have in this portfolio, which in general, we would expect to see growing over time. And in some instances, those stocks are hard to get. And so here's a good way to get those stocks by buying in this fund. And so it's really odd to see this fund trading at a discount. Again, I want to remind folks, this is the largest, similar thing to an ETF in Jamaica at $25 billion. It's bigger than Sagicor Select, Sagicor MND, and QWI, all added together, multiplied by 2. So certainly the biggest ETF equivalent in Jamaica, run by folks who've been doing this for over 30 years. And I personally have been at the team for almost 7 years, and I continue to be amazed at the innovation and the genius that I see within the Mayberry group of companies. And the addition of Patrick is a continuation of that commitment to innovation. So again, it's a buy. That's all I would say to you guys. And the next graph shows sort of the chart. We're charting over time, 2 years time, to show that there are ebbs and flows, but in generally we continue to see the share price trading below the NAV. Now, as interest rates trend down and as folks need to make wise choices in buying stocks and looking for blue chip, renowned, established companies, I'm going to bet that we see these two lines coming closer and perhaps crossing over in the next 6 to 9 months. So as long as the stock price is below the NAV, guys, this is a clear indication that you should be buying this stock. And so there's a great opportunity for folks to be buying the stock, is all this graph says to me, really. And with that, I think I've finished my presentation, and I'd love to, jump into some questions for Chairman Berry and for Gary Peart. So first one is, personal one, Chris. I want to ask, why the sale with CPJ? What was going on in your mind? Can you, share a little bit of your thought process behind that? That's a big transaction, overall broker deal of close to $5-6 billion, and you tagged right along and sold your 20% stake in MJE. Why, sir? Can you tell us what's going on in your head?
Sure. So, from my perspective, the team that we had at CPJ, we carried pretty much as far as we could, and I think for the company to continue to grow and prosper, it was necessary to have a partner with a much bigger platform than we have. So, like, if you look at that transaction, what you will see is that the Muslim Group and the AS Bright, they are in a lot of, we are in sectors that they're not in, and vice versa. So the cross-pollination of the two companies is going to be a huge opportunity for the new buyer. And that's why we get a premium to the market. The second thing is that we had succession planning issues. Our lead manager, Mr. Tom Tyler, he's like getting up there in years. He's like 67. And, we had no clear successor to take over from Tom. So, I think everything just came together perfectly. It was a great opportunity for AS Brighton, and it was a great opportunity for Tom, myself, and Mark to get some cash. And in our case, we cashed out fully. In their case, they still have some skin in the game, and I think they're going to benefit handsomely from staying in. But we're more focused on investments that are listed on the Jamaica Stock Exchange, and especially more Jamaican type companies. And AS Bright really doesn't fit that bill, so that didn't really stick cash and leave.
Great. Thanks for those insights. I appreciate that. And Mayberry brokered that deal, so it was a bigger deal than just Mayberry Jamaican Equities selling a 20% stake, I think, in total. And this was published, and AS Bright acquired roughly 45% of CPJ, and we helped broker that deal. And I was proud to be at the table. We just said, hey, they're strong in the hospitality space. Jamaica's built on tourism. It's a company that's poised for growth. I watched that stock price go from $4 to $20, then come back down to $12, and then we went into sort of this recessionary type period, and the stock was trading around about $9. And it's good to see that AS Brighton could still see the value in the stock, and we were able to get the deal done at 10.50, and I think that's a good deal for all parties considered. So good going there. I think it's a great deal. Gary, I want to ask you, this MJE report sort of mentions the adverse impact of Hurricane Beryl on the Jamaican economy. I'd like to ask you, or Chairman Berry, how do you feel that Hurricane Beryl may have impacted the MJE portfolio?
Well, if I can take it, I don't think we've seen the full impact because Beryl was in around July, and so you'd have to get the results from the companies as at September 30 to see what that situation would really pan out to be. The good thing I believe for the market is that we have seen two successive rate decreases. Signal rate by the BOJ has been dropped by about 50 basis points, 25 basis points each. And I think the market is poised for a turnaround. I mean, there are several stocks out there, even with Beryl, that I believe are undervalued. And I think as interest rates continue to go lower, we'll benefit from that. The situation with Beryl, I think, will be transitory. Some companies that we hold in the portfolio were impacted, like a Supreme Ventures, for example. I mean, I don't think their operations are fully recovered. So there's likely to be impact there. There's several other entities that you will see that. But I believe going into the fourth quarter, along with the reduction in interest rates, you will see that starts to play itself out. So whatever negative that occurred from Beryl, you'll see it flow through into the September quarter numbers. But I think you'll see recovery certainly by the December quarter for any company that has been impacted.
Great. Follow up for me first to you and then to Chairman Berry. So speaking of interest rates going down, so we did see a blip in inflation for the month of August. It spiked, went outside of the BOJ range, and then has come back down now. September inflation results just out, 5.7%, so back in range. So again, in 6 out of 7 months, inflation's within the target range. We've seen interest rates coming down by the central bank, whether it's overnight rates, 30-day CD rates. Also in September for the first time, Patrick, I think we saw the Fed cut rates by 50 basis points.
Yeah.
Right? So we've seen the Fed now cutting rates for the first time. So it seems to me like all the macroeconomic variables are moving in the right direction. Interest rates coming down, inflation's within range. What are your general expectations for the last quarter for MJE based on what looks like a change in the headwinds? What's your general expectations to stock prices, specifically as it relates to MJE?
That's me.
Yeah, that's Chris.
That's me or that's Gary?
I wanted to start with you, Chris, and then go over to Gary afterwards. So wanted to get both of your perspective on it.
Okay, so you're not gonna like the answer I give you, but I'm not one of those guys who really focus on economic cycles. I mean, for me, it's very interesting academically to be able to predict the cycles and to watch them go up and down, and to watch the central bank react to them and the commercial banks. But my feeling is that these interest rate cycles really create opportunities, right? So, and what's the opportunity? So, when things are slow and the interest rates are high relative to the value of the stocks, it really creates a huge buying opportunity for people like me. So I'm looking for companies that are going to be growing over the next 5-10 years consistently. So I really don't care about short-term events that much. And so, when other people are selling, it's the time I'm most likely buying. And I'm focusing on the medium to long term. And that's why we don't carry a lot of debt, because the debt can really eat into the principal of the investments. So I'm really focusing primarily on, is this company going to grow? Is it going to grow consistently? Is it going to be beating inflation with that growth? And for 39 years I've been doing this, and I can tell you, I mean, except for very brief periods, like in the Omarian area of 100% rates, and you don't, look at Grace Kennedy. It's over 100 years old. People who invested a couple grand in Grace Kennedy back in the day have millions now. So, that's what I'm doing, and that's my focus, really. Thank you.
Yeah, I appreciate that. So you are a long-term investor in the market, and I really do appreciate that. You're not a market follower, you're a market leader. So you don't tend to pay attention to the movements in the monetary policy, the short-term movements. But I believe the rest of the market probably does. And so thanks for that perspective.
So it's not really fair to say I pay attention to it, because there's an effect on how it affects the prices and all of that. But it's not the thing that's going to drive my buy decision or my sell decision.
Gotcha. That makes good sense, Chairman Berry. So speaking of buy decisions, you bought $67 million more worth of Dollar Financial Services Limited during the quarter. Do you care to expand a little bit on that? What's going on in your mind there, and why Dollar Financial Services?
Mayberry was the first mainstream company in Jamaica to go heavy into microfinance. And the reason for it is that, or what we notice in Jamaica is that credit is not generally available to most people. So the people who have access to credit are in the minority. And we feel that that sector is still very young and has a huge opportunity for growth. So, we have a lot of different interesting companies like this, similar type companies, as you know, Dan. And one of the things about Dollar is that they have a great young management team, and they have a great corporate governance structure, and they have a great incentive scheme for the management. And they also have pretty good back office. So when you bring all of these things together, it can be a very big win. So, for me, I think Dollar is not just going to be one of the first microfinance companies to hit over $1 billion in profits. I think in the future years, people are going to look at it and say, wow, this is like a bank. But it's not a bank because they don't take deposits, but the earnings are going to be bank-like earnings. That's my hope and what I think can happen.
Great. So it's safe to say this is another one of your long-term investments, I would imagine. It's good to know. Great. So Gary, again, your thoughts now specifically on the market in general. So, what are you expecting for the next quarter? Again, same question with a twist. Are the changes in interest rates, inflation, the fiscal policy, the relaxation of some of the tight fiscal policies in your mind likely to create good headwinds for us to see stock prices rising over the next 3 to 6 months?
Yeah, my simple answer is yes. We've seen where, BOJ has released a lot of liquidity. Unfortunately, a lot of that money seemed to have gone and chased the dollar. You've seen a devaluation in the dollar. But you've seen where they're trying to rein it back in, and as the market moves inversely to interest rates. And, everything points to, when you spoke about inflation jumping the other day, I mean, that was the impact of barrel, short term. And we're happy to see that it has passed through and it has come back into the range and probably will go a little bit lower, which allows the central bank to continue reducing rates. What is interesting is, notwithstanding the temporary jump in inflation, it didn't prevent the Bank of Jamaica from reducing interest rates. So in my mind, that's a clear signal that they knew it was a blip and it would come back into the range. And, when you look on the economy as a whole, I think, where the economy is, there are many different sectors that would benefit from that reduction in interest rates. And so as interest rates go lower, I think it's positive for the economy. I think it will drive a lot more economic activity, which will help with profits for companies which are already undervalued. So I believe selective companies are going to do pretty well. One of them is NCB. I mean, full disclosure, Mayberry, MJE has been buying a lot of NCB. And as we've always indicated, NCB has significant upside in terms of the price. And interestingly, coming out of the last investor briefing we did with the NCB guys, they did point out that, as they pay down their debt, they expect to materially increase the dividend. So you have a stock that is at a relatively all-time low. It has significant upside. I mean, we value NCB in excess of $80 at this point in time. And the profits are back. You're seeing where, because of the debt, they're not paying out interest dividends at the rate that they would want, but they've indicated that once they do, that will happen. They have 2 deals which are to settle. That will help to pay down the debt. They still have a relatively large debt, but every 10 to 20 million US that they carve away at the debt, it reduces the interest expense, and it's all going to be positive. And I close on that NCB story. Angus Young has a very interesting phrase. He said that at the start of the year, NCB, had a lot of headwinds they were flying into. And he says when he gets that inflection point, those same headwinds will become tailwinds. It will help to push that NCB plane to much higher and higher levels. I think those headwinds have slowly but surely been converted to tailwinds. And at this point in time, I just see those tailwinds just getting larger and larger. So, a company like that, I think, is going to outperform. The MJE portfolio is nicely balanced with it. I think it's going to be one of the main contributors to profit for MJE, certainly in the first quarter of next year. And we have several other, for want of a better word, sleepers done in the portfolio. And as I said, some of them will start to bear fruit in the next quarter.
Yep, I'm inclined to agree with you.
So, Gary, what about Guardian?
I mean, Guardian actually, outside of Mayberry Investments, is probably one of the cheapest stocks in the marketplace. It's actually cheaper than NCB as a stock. So what you have happening is that you have a lot of people's emotion getting ahead of the true value of these companies. And, NCB is the majority shareholder in Guardian at this point in time. So that's another benefit. So you have upside in the stock price just from the core earnings. You have another potential upside because of what is happening in Guardian itself and the fact that it's undervalued. And you have a dividend. So there are a lot of tailwinds that can really push that, as I said, that NCB plane. So MJE is also quietly building a position in Guardian as well. So as I said, I had it as a sleeper, but it looked like Mr. Berry woke up the world. But I mean, those are the facts that Guardian is actually cheaper, or meaning it's a much better buy than NCB at this point in time. So I mean, I think NCB is worth north of $100, right? So you can make 100% on that from where it is now. And the challenge that you see with the stock in NCB is that you have a key major seller that's selling stock to cover some debts. But we've seen in the marketplace over the last week or two that the moment that seller comes out of the market, the stock just takes its time and starts to float high. So that's a very, very clear sign that stock is going to jump. When it jumps, it's not going to jump by 50 cents on a dollar. It's just going to gap up, right? Because when people think that there is a seller out there that has to sell, they keep bidding the price down until one day when they realize there's no more, it just gaps right up. So I just see positive things there. And, so whether NCB, certainly Guardian, even Scotia, Scotia has some very good signals looking at right now. So I mean, as an investor, we always say the only stock you need to own is MJE. But at this point in time, there are several other shares out there. So it is perfect for a new equity investor or even an old one. You can let Gary, Chris, and Mark take the stress out of your life by MJE, only stock you need to own. Or if you want, you can take the position in some of these things, but you have to know when to sell.
Absolutely, and you guys certainly demonstrated with this recent CPJ deal, and I keep repeating it because it really is a big deal. We don't often see $5 billion deals being done in our market because our market is relatively small. Patrick, I'm going to keep saying that you're going to get readjusted to Jamaica, but yeah, the CPJ transactions one I'm really proud of, and I can't wait to see the next big transaction that Mr. Berry is going to be up to, because now he's sitting down on. Got a lot more capacity to borrow if he sees the need to, having reduced his debt substantially during the year. And we've seen you guys showed your hands, which 5 positions you took up in the last quarter: Dollar, JPG with Cinco, Wigton, and JMB. And I expect that over the next quarter, we're going to see much bigger deals going forward. Okay, so let me, still got 2-3 more questions, but I do want to see the questions piling up on online here. So let me tackle a few questions, Sarah, and I'm going to try to go through them strategically. So first one that I want to touch said, if Mr. Peart's no longer the CEO for Mayberry, does that mean he'll have a lot more time to focus on SVL? So that's the first one I'm going to ask you, Gary. I didn't make it up. It's right here. It's right here from TM. TM, I wish you'd give your full name so that they could they'd believe me. But TM asked this question.
Yeah, so there's this misnomer out there for some time about the Mayberry and the SVL. The fact is that the Mayberry Group is valued close to a little bit under $20 billion. I just want to give my congratulations to Patrick. Patrick, yes, on his appointment, an amazing appointment. He has a wonderful team that he has inherited, and I'm sure they'll do great things. But within the Mayberry Group, Mayberry has MJE, which we're discussing their results right now. And then also we have another private equity subsidiary that's called Whitebase. And within Whitebase, there are several private equity transactions. I think the one that's probably known to our shareholders would be Chalmers, the property
Cherry Hill.
because out at Chalmers Avenue that, we're working on. We've built 2 buildings out there, etc. So all of those transactions in Whitebase has always required the attention of myself primarily, but also Chris and Mark. And so one of the things about bringing Patrick in is that Patrick has very, very strong expertise in 3 key areas that's required to move Mayberry forward for the next 10 to 30 years. The first one is asset management. In terms of a business, we're always trying to balance reward and with reduced risk. And we believe funds under management, asset management business is the way to go. And so as Patrick indicated, he was part of a leadership team that generated $7 billion US on $20 trillion. I mean, those numbers are crazy, but $20 trillion in funds under management. So he knows everything about that, how to acquire the funds under management, how to keep managing properly, and most importantly, to drive the cost down. Because when you have that size portfolio, you need to have the most efficient IT infrastructure. You need to be able to have very, very tight salespeople, etc. Most importantly, even on the digital side. So he comes with those skills, which will help to supplement and I would say turbocharge what we had before. And so what it does, and which is the reason we say we're strengthening the team, you've brought in a very good expert that will deal with that new revenue stream. At the same time, it leaves more time for Chris, Mark, and myself to focus on some more investments and some more other things that's happening in the group. So, I spoke to Whitebase in terms of private equity. You all are aware of some of our more public investments. So we just exited CPJ. We have a position in Mayberry, not in Mayberry, in SVL. We're building a position in Dollar. So a lot of these different things, depending on the percentage we have, we have a very clear methodology to ensure that these different investments are doing what we expect them to do. And so, in short, it's not that I will have more time, because we're already splitting a lot of these responsibilities. So, I will still, as indicated in the press release, I'll still be chairman of Mayberry, and so therefore I will have oversight. I mean, I've moved from 11 direct reports now to just one, who's Patrick. So from that perspective, that will reduce the amount of oversight, but the workload is still there.
All right, thanks for that. Chris, Limitless Podcast asks, what's your thoughts on a MJE share buyback?
I don't really see that in the works at all. I don't really see that in the works. I don't see the point to it.
Okay. Gotcha. Gary, Gary, did you want to comment on that as well?
I mean, my position has always been, to allow a stock like MJE to trade below its book value is almost blasphemous, right? But that's also the case with Mayberry. But we have once again demonstrated with MJE that we not only are able to liquidate positions at their true value, we've also, in the case of CPJ, we're able to liquidate CPJ above market, and we keep doing it, but notwithstanding that, people still trade the stock at a discount because they feel we can't sell those large positions, even at market, even though we're all selling them at premiums. So in terms of the specific question, there is the opportunity to buy back the stock, but we prefer to give that opportunity to existing and new shareholders to buy the stock. It's a screaming buy, and we're going into a period with lower interest rates, more interest in the market, as you indicated, liquidity to invest in the marketplace. So we leave it up to third parties to invest in the stock. I close by saying, it's not a matter of if, you're going to see that discount close as more and more people start to appreciate what MJE is about. You will see it close. So it's an opportunity there for some key investors to take positions. I think at a good now where the price is really, really good. But if you don't, somebody else will come and do it. So let's see.
Absolutely. Another question from
Dan,
Chairman.
There's actually an ongoing buyback, right? So both on MGL and MJE, I'm always buying back shares. So there's an ongoing buyback, but it's not by the company.
Got it. So there's a significant shareholder or two, or three, if I could be counted, always looking to buy the stock when we see it trading below the NAV. Appreciate that clarification. Gary, another question coming in online. I think I want to direct this one to you. What do you think about what's your thought process about the prospects for Dollar and also the possibility of a spin-off of Ultra?
Dollar is just one of those companies that's so perfect and suited for the junior market. It has potential to grow in dividends. There's massive potential to grow from our capital perspective. It has Ultra. The challenge I believe that the directors of Dollar face is that, it's sexy to list a company, right? But in listing the company, you're giving up 20% of equity, minimum. The most expensive form of financing is equity because it's perpetual. right? So if you list Ultra at this point in time, when it is at the very early stages of its growth and expansion, you're giving up 20% into perpetuity. So as a shareholder of Dollar, it might be serve our interest better to keep Ultra, where it is, because you get more value by keeping. You get more value as a Dollar shareholder to keep it. Once you list it, you sell that 20%, it's gone. It's gone forever to the Dollar shareholder, right? And if Ultra needs money, Ultra can borrow, or Dollar borrows, and you create significantly more value from that perspective. There are other opportunities out there. I think acquisition opportunities are out there for Dollar to grow. I mean, right now, it is the fastest growing microfinance business out there, and it still is nowhere near its potential. So as Chris indicated earlier, they have a relatively young management team, but also very qualified and hungry in terms of hitting their KPIs and what they want to achieve. So I think leaving it as is, and I think leaving it as is and growing, whether through acquisition or just continually doing what they're doing now. I mean, they currently, I think, Dan, you're raising a bond for them right now in the marketplace, for our fixed income potential investors out there. I think that bond is yielding 12%. So that's a huge opportunity for potential fixed income people, especially at a time where we're expecting interest rates to go lower. And again, that just shows you another big benefit of Dollar. I mean, the average rate at which they lend is 3 to 4 times above what their cost of financing is. So they can come to the market at 12. Investors can come in now just before interest rates fall. And the reality is that as you go into next year, they will benefit materially from falling interest rates. So, that's the reason we have it in the portfolio. And if we're able to get more shares, we'll add to the portfolio, because every different way you look at Dollar, you just see opportunity and scope for growth.
Agreed. I couldn't agree with you more. It's amazing to see, and I think Fesco and Dollar are the two best examples of companies that have IPO'd in the last 3 years, put forecast numbers out there and exceeded the forecast numbers. In the case of Fesco, growing their profitability by over 150%. In the case of Dollar, growing their profitability by 200%. We've watched them grow their loan book from 300 million to $1 billion, and now from 1 billion to 2.5 billion. And I think that 2.5 billion will grow to $5 billion over the next 12 to 18 months, while containing NPLs and ECLs. So it's impressive. Non-performing loans and expected credit losses, for those who I'm using too many acronyms. So it's impressive to see how they've grown that debt book. Yep, we're raising $2 billion for them at 12% in a 4-year bond secured by their loan portfolio. We originally thought to raise $1 billion. It was immediately oversubscribed. We decided to upsize to 1.5 billion, and now we've decided to upsize to $2 billion. And it's a company that I also really like. We've declared conflicts, I believe. If not, I'll go so and do. Mayberry Group is now essentially perhaps the second largest shareholder in Dollar Financial Services Limited. And as you've heard from Chairman Berry and Gary Peart, they're prepared to increase their position further in the company, because we like the microfinance businesses. Started 12 years ago, first with our Access, a company that we helped IPO, and then eventually exited that in a fine way. And so this is our second time around looking at microfinance companies. So with that, I would like to allow Chairman Berry first closing comment, just again to talk a little bit about the future, your expectations of growth for the stock market, and then I'll allow Gary to then do a final close on MJE, and then we will close out. I apologize for like 5, 6, 7 more questions online, but I think time doesn't really allow us to continue. I don't want the program to be dragging on much beyond 1 hour. I think 1 hour is a good time. to keep you guys hungry, because we will be back again next quarter to present results. And I'm going to predict the final quarter of the year is going to be the best quarter. So, Chairman Berry, your thoughts on the market in general, how you're feeling about the stock market in general, prospects for growth. How are you feeling in general about the Jamaican stock market?
Yeah, so Dan, thanks for that closing comment. So I think one of the trends that I'm seeing emerging now, which is probably a medium term trend. For the last 20 years at least, we went through a long period of lower and lower inflation, or stable to low inflation. And at one point, we were worried about deflation, that we'd have deflation. But right now, what is happening is that the US and China are in a trade war. And I think that the whole global inflation is not going to be low again for some time. And so what this means is that the value of money is going to become increasingly worth less and less. So people want to try to stay out of cash and get more in real investments, whether that be stocks or real estate or owning a private business. I think is where you want to be going forward. Might sound kind of crazy, but I really believe that this new trend is pretty much baked in the cake. The hostility between US and China is probably going to rise over the next 5 to 10 years. I don't see it declining. And so money is going to be worth less and less. You're going to see higher and higher inflation as all the manufacturing and stuff is forced out of China by the US. Things are going to cost more and more, and money is going to be worth less. So you need to be investing your money. So MJE, only stock you need to own. There you go.
Thank you, Chairman Berry. Appreciate that. And Gary, last comments from you specifically on MGE, expectations for future growth going forward.
Yeah, as Chris says, MJE, the only stock you need to own. One of the things that we've found over time, we try to advise customers, friends, family, and we keep seeing people just don't do it. You have to focus on your environment. So I give you an example. Mayberry Investments, which has now changed, is now Mayberry Group Limited, is one of the cheapest stocks in the market. 3 months ago, they put out a notice that they've changed their dividend policy. They're going to move towards a quarterly dividend policy. They announced a dividend of 12.5 cents. If you assume that they can maintain 12.5 cents for every quarter, that's 50 cents a share. The price is now somewhere around $7 odd. That's a dividend yield north of 7%. It's now one of the highest dividend yields. But yet still you see the price still where it is, because people just have not recognized that, Mayberry is now going to be paying dividend on a quarterly basis. So you're not going to get cash flow. And it's a huge change for existing shareholders of Mayberry. And it's just, again, it's not a matter of if, it's a matter of when, the market responds and, you see the price moving higher, just from the perspective that you're getting more cash flow out of a stock. MJE helps to drive that. And, we explain that one of the decisions is Mayberry has a very long-term view in terms of value and extracting value. But what we realize is that at least once every 3 years, we have a major transaction that monetizes and crystallizes the unrealized gains that we have on our portfolio. So even if you have a situation where you don't realize a massive profit in a year, we have reserves of cash that, the board has taken a decision. We'll start to pay a dividend on that basis, because we see where we keep replenishing that cash at least once every 3 years. So we're able to, see opportunities like that, because we're information mongers. So every time there's a change, we're out there looking for those changes and how to benefit from them. That's why, we take positions in NCB, Guardian, Dollar, and we're spoken about a whole bunch of them. But, we alone can't do it. And the simple reality is that, I leave today to say that MJE is going to continue to do well. We have stocked up on some really, really good assets. I remember about 6 months ago, Dan, when people, were asking about how are you going to be able to repay your debt? And when the real question was, why are we taking on more debt when everybody was running out of the market? It was for this reason. We saw huge opportunities and we thought it was important to take the debt then. We sold CPJ, we've paid down the debt, but we now have in our portfolio these stocks at prices that we would not have been able to get if we didn't take that decision then. And that's how you manage your portfolio. And MJE is going to benefit significantly from those moves when people were running out of the market when we were buying, right? And that's why we say MJE, the only stock you need to own, because we live, we breathe this market. And so when we see the opportunities, we take it. The average person might not necessarily see it. And as I said, why stress yourself? Just buy MJE. Why? It's the only stock you need to own. Thank you.
Thanks for that, Gary. Thanks for that, Chairman Barry. Patrick, again, welcome to the club. We look forward to talking to you a bit more. We'll be looking at MIL results coming up in the next quarter, so we'll definitely be having you on the program and speaking to some of the strategies and initiatives you'll be coming up with to help grow Mayberry Investments Limited. Well, folks, that's it for today. The only comment I want to make is when you can buy a growing stock run by a brilliant team at a 30% discount to NAV, which is where it's at today. If you can run and get yourself some MJ at $10.50, it's a screaming buy opportunity. And we're going to come back in 6 months' time, and I assure that price is going to be up substantially. You're going to sit yourself down. I wish I bought more of MJE. So it really is the only stock you need to own. So with that, I want to thank our folks for today's discussion, which we've just brought to an end. I want to thank all our viewers for tuning in. Your support is always appreciated. Big thanks to Chris and Gary for making their great contribution and providing their invaluable insights. To our viewers, be sure to look out for updates on our virtual investor forum by following us on social media. We share all things forum related on our social media pages. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Remember, wise investors, slow and steady wins the race. Keep safe, y'all. Bye, Chris. Bye, Gary. Thanks, Patrick.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking, the Mayberry Virtual